Good morning, my name is Carl Williamson. I'm the manager of the Nexus Global Solutions Portfolio and the Nexus Global Dynamic Portfolio. It's May 2023 and I'm speaking to you from our London offices. In April, the Nexus Global Solutions Portfolio was up 0.8% and the Nexus Global Dynamic Portfolio was up 1%. This took the year-to-date returns to 2.1% for Nexus Global Solutions and 3.9% for Nexus Global Dynamic Portfolio. Positive economic momentum supported risk assets in April, despite the continued stress in the US banking sector. This meant that developed market equities returned 1.8% in US dollar terms, with value stocks modestly outperforming their growth counterparts. The strength of sterling versus the dollar did prove a modest headwind during the month. In April, data showed that growth remained remarkably resilient despite the increase in interest rates. PMI data for the Eurozone, the US and the UK all came in above expectations. The Q1 GDP number for China also came in above expectations. Falling energy prices helped bring down headline inflation in developed market economies, and the contribution is turning negative in both the Eurozone and the US. In the UK, fuel prices have fallen, but the contribution remains positive due to the lagged effect of the energy cap. OPEC announced a cut in production aimed at stabilising oil prices around $80 a barrel. While this may reduce the base effect, the fact that energy prices have fallen sharply since their spike last year means that energy prices will continue to prove a drag on inflation going forward. Today, around 3/4 of US companies have reported, and generally results have been good. Just under 80% of companies have reported results that came in above expectations. Coming into the period, there was an expectation that earnings would fall around 7% compared to last year. Currently this is tracking nearer to down 3%, which is clearly good news. With value stocks outperforming growth stocks, US equities underperformed their global peers during the month. The UK equity market had a good period, and we saw good performances from portfolio stocks including Segro and Prudential. Drug stocks were also in demand during the month, with the portfolio's holdings in Medtronic, Novartis and Roche all performing well. BT has faced a number of headwinds in the recent past. However, we think revenues are stabilising and earnings estimates have stopped falling. Given pressure from Ofcom, BT is now embracing full fibre rollouts, which is good for the UK's connectivity. With a new CEO and chairman, we think there will be a new, fresh, revitalised strategy, and during the month we did make an investment. Data in April showed that the economy remained remarkably resilient despite the challenges from higher interest rates and the stress in the banking sector. Equity markets have now broadly recovered from the volatility seen in March. Near-term recessionary risks may have receded somewhat, but clearly there are still risks out there, and the crisis in the banking system in the US does not appear to be over. The closing of another US financial institution at the end of April highlights that the cumulative effect from the increase in interest rates we have seen is perhaps not yet over in the developed economy. However, the current US earnings season shows that a lot of companies are navigating this period well. It's been my pleasure to speak to you. I look forward to speaking to you next month.